What's going on, y'all? It's your boy Nicholas, and welcome back to Nick's Dynasty. Today, we're doing another 5-year review of some of my investments. We're going to look at Fundrise. So, I do have some investments with Fundrise. Let's see how my portfolio is doing after 5 years with this platform. If you do not know, this is a platform that invests straight into real estate, straight into projects, and to physical real estate without you needing to own the real estate. So, you get partial shares of that. So I started this back in like 2019. So let's see what my value is going to be and what my returns are going to be. Let's check it out. It's been 5 years on Fundrise. So my portfolio, the most of the investments is in this flagship real estate fund. It tells you the strategy of what they do. Most of it is built for rent, 67% of the portfolio. You also have industrial, multifamily as well. It explains what built for rent housing communities are. Shifting consumers' preference coupled with millennials entering their prime family building phase, we see the opportunity to diversify the flagship real estate into the next generation of preferred housing. This strategy complements our workforce affordability price point housing investment in that it offers often captures the tenants that is ready to upgrade from an apartment into a single family home. We expect to see continued strong growth. So they talk about like their vision and what they're doing, the strategy and whatnot. It does talk about workforce housing. Let's see if it tells you about the properties. So down here, it tells you some of the process properties it has: Highland townhomes, investment size, date acquired, type, build for rent, some property, some land, industrial right here. Looks like it is like a warehouse. So all this stuff, you do have money tied into it. It tells you the total percentage and the amount, equity and debt, has like a location and whatnot. But they do a good job of giving you a lot of details of what might be in these investments. And we can look at some more residential stuff right here. It's going to be in Tennessee. It's going to be mostly equity into the flagship REIT, real estate fund. I keep saying REIT because some of this is called the REIT, but this is a REIT in general. Talks about the market, also gives the fund information as well. Inception 2021. But yeah, it talks about more of the investments that we are doing. And the other biggest holding or the smallest holding that I have is going to be this Growth E-REIT. And it talks about the strategy right here, mostly multifamily homes. And then it shows more of the properties right here. $6 million one, a $32 million one, $15 million one. So, and also some industrial as well. So we'll look at like how much money I actually like how I started. In the beginning in 2019, you had to start with a lot. It might be the same now, like $500. So you can see here, I started off with $500, and then I didn't really put much in there. I got my dividends. I got dividends, and then I didn't really put money into it until 2020 when I put $100 in as well. So not much investment going on. Looks like I did put another $100 in, I guess. So 2021, it looks like. So we have it in 2020, 21, and then another $100 a few months after that. So I didn't start off with too much money in the beginning, but I got this 5 years ago. Let's look at it. Our value now is $1,669.15 after 5 years. and our net return is not the best. If we go to net returns, you can see it's an annualized gain of 4.9%. And we look here in 2021 Q3, it went up the most. It went up by 9%. But when I first started, it was going up. It was going up by a little bit. Kept going up here until Q3 2021 actually, and all the way till Q4 22 is when the first negative period went down, and it went down by net 3.1%. Then it bounced back up by 0.6%. Then it was down 2.3, down 1.7, then stagnating down 4.46. It was up a good amount in the double digits, but now we're only at 4.9%. If you want to look at like that graph one more time, the highest value we did get was $1,713 for this portfolio. As you can see, the whole time, most of our money is coming from dividends, and appreciation was up, but as we can see, the appreciation went down to negative, so the appreciation was taken away. Let's see if we can look at the dollar amounts. So here in 21, we had a net return appreciation of 102, and then we had $77 of appreciation that quarter, then 42. But when we started going down, we took away 86 bucks of appreciation. And then we added just 2, then we went down another 45, went down another 35 in appreciation, and we went down another 84. So in total, we went down a lot in appreciation. That is crazy. So if we look at this bull run of appreciation, it stopped appreciating in Q3 22, but up until Q2 22, our full appreciation was $309 until we started subtracting from that. And in the beginning, most of the money was actually coming from dividends. $2 here, but no appreciation. $12 here in dividends, but no appreciation. And then we didn't get our first appreciation until our fourth quarter, which was Q4 19, where we got 54 cents, where we got $12 in appreciation, almost 13. Then when we started seeing these big dips, these big jumps, most of the money increased by appreciation. So $45 of appreciation versus the $7.90 of dividends. And that kept on being the trend up until now, where most of our money is coming from dividends. We're still receiving dividends because they are bringing in income, but the appreciation is taking it down. Overall, I'm not really happy with the performance, but I'm still going to keep everything. This is a long-term play to get some my foot into the real estate market, and at now I guess it might be a time to put some money into it as we buy the dip, if that's a thing in real estate. They did put they do have a lot of articles to keep people updated, and it says buying the bottom. We believe falling interest rate will act as a tailwind, pushing real estate values higher going forward. And it says I can invest right now, and it's going back into that flagship real estate fund. But yes, there are there's not going very well, but they do keep us updated. And now you can invest in some startups in here. But now I had like 15 bucks in there, but I can't put any more in there because you have to have a certain level of account with them, and I only have the basic level, the core account. And I would have to put more money into it to get more features. But this is Fundrise, and this is not financial advice. I'm not telling you to invest your money into here because maybe they're looking for some explosive growth going forward. But I'm just sharing with you what I've gone through over my 5 years. But Luckily, I don't have too much money in here, but maybe I'll start putting a little bit more in here now. I'm basically putting $15 a month into it now. If I am putting some, you see 15 here, 15 here, 15, 15, 15. But yeah, Fundrise is, 4.9% increase over 5 years is it's 4.9% growth over 5 years is not what we're looking for at all. That is really bad, but I don't have that much money in here. But we shall see how it goes. We'll have a little update on it maybe 5 years from now. But one thing to note is you get a penalty taken off of your withdrawal if you do it after 5 years, before 5 years. So I think I can take my money out now without having penalty, but I think that's the initial $500 I put in. All the new money has to go, I believe, 5 years until it's penalty free. But do your own research if you're thinking about getting to Fundrise. But this is my portfolio balance. You can see some spikes here. I might have put some money in here actually, but you can see it here. But now we're like just trading sideways and even taking some dips now. But we shall see how it goes. Dividends I've got received were $162.92 over this time. It talks about the gross dividends as well being higher before the advisory fees. Advisory fees of $7.24. Fundrise, 5 years. A little dip in the toe of real estate. We shall see what happens, y'all. Don't forget to like, comment, subscribe. Peace out, y'all.